So we've just had the December FOMC decision, of course, the final FOMC decision of the year. The committee, as expected, delivering a 25 basis point cut to the Fed funds rate, in turn lowering the target range to between 3.5% and 3.75%. But it was a hawkish cut, bang in line with what market participants have been expecting. Not only did the statement make a hawkish revision to the committee's policy guidance, now noting that they will be determining the extent and timing of additional adjustments to the Fed funds rate, but we also had a hawkish vote split as well, with not only Jeffrey Schmid, but also Chicago Fed President Austin Goolsbee dissenting in favour of standing pat on interest rates at the December meeting. Although don't read too much into that dissent, because of course they will be rotating off the committee at the end of the year. In terms of other bits and bobs, the committee largely kept their economic commentary unchanged, reflecting the lack of economic data that we've had since the October meeting, but they did make a notable revision in terms of their balance sheet operations, again trying to get ahead of any tightness in funding markets in the United States. The FOMC will now be resuming balance sheet expansion. They will be conducting reserve management purchases of short-term treasuries in order to ensure that reserves remain ample. To be very, very clear, this is not quantitative easing. This is purely a plumbing issue that the Fed are trying to address here. They are not trying to bring down the duration of treasuries. They are not trying to bring down long-term interest rates. They are simply trying to ensure that the US financial system continues to function as indeed it should. After all of that, market participants, and also digesting the dot plot, of course, which was largely unchanged from that issued in September, markets have kind of taken it in their stride, to be honest with you. A little bit of upside in gold, a little bit of upside in equities, a little bit of upside in treasuries, and a little bit of downside in the dollar, but all very, very contained, with that statement being pretty much as in line with expectations as it was possible to get. Of course, focus now turns to Fed Chair Powell's press conference at the bottom of the hour. The key things market participants will be looking for really are hints on the policy path, and Powell will obviously not commit to a concrete future policy path, but we'll be looking to see whether Powell reiterates that policy is still modestly restrictive. We'll be looking to see whether he again frames this move as a risk management cut to try and support the stalling US labour market. And it's also worth noting and just seeing whether Powell describes policy as being in a good place. That was the language that he used right at the start of the year to indicate a prolonged pause. And if he repeats that phrase in about half an hour's time, that could cause a little bit of a tantrum in terms of risk appetite. But thus far, a hawkish cut from the Fed, and all eyes now turn to Jay Powell at the bottom of the hour.